Hey everyone, welcome back to CryptoCache. Thank you very much for joining me. I hope you're having an amazing day. We're going to take a quick look at God's Unchained, and just before we do, we look at Bitcoin, see what's going on in the market. We're just going to take a very quick peek at Bitcoin because it's ultimately just performing well. I hate to say that, it kind of sounds weird, but it's doing good. Now, bear in mind, this is just a simple recovery from the last 5 days of trading that were pretty terrible. So we still haven't seen higher highs and higher lows on the 1 day chart yet. So we're not out of the woods yet. We need to see 52,300 as a support level moving forward. So we need the 1 day candlestick to close above that to feel bullish at all in this regard. But nice small little increase of about 5% last trading day in a half, and ultimately not looking bad, right? So all in all, that's kind of where we're at there for Bitcoin. Just a really quick synopsis. And just before we jump into Gods, I want you to know I'm not a financial advisor, right? I love teaching people how to trade. Been doing this for over 15 years now, and my goal is to help you become a better, more effective trader. I try to explain things in these videos, so I hope you can learn as much as you can. I've also got a trading community, link in the description below for that as well. And just note we're going to be transitioning to a website here soon to make the learning experience even greater. So it's going to be awesome, getting a lot of training videos together. So hopefully we can all learn and grow together. Check that out in your own time. Now taking a look here at Gods. First things to note here on the 1 day chart, let's see if we can pull up some moving averages. Not enough data, right? So we're pretty much early on here. I believe this is a fairly newer coin, looking at October 29th for the data here on OKEx, which is the oldest, or just the most amount of data I could find. Everything else is fairly new. I think Coinbase, a few other ones were just listed a couple days ago, which would explain the recent increase in price. Okay. That being said, RSI is up over 50, under 70, all good things there. Had a recent MACD convergence, makes perfect sense. We don't need to really worry about that much. The 1 day chart is ultimately good about helping us understand the macro movement, but the moving averages, everything's a little too early right now, and ultimately it's not really something that we can use a lot of previous data on, right? Now, one thing we can note here on the 1 day chart is we had a previous all-time high that appears to be pretty much almost equal to the current price action right now, right? I mean, it's just barely above. Therefore, we can see this resistance. Just yesterday, the price could not pass the previous all-time high of roughly $7.75. So it's important to note that this is a strong little resistance channel here, and that's going to continue to work as a resistance moving forward until the 1 day candlestick can break above and close above. All right. So again, not bad stuff here. It's not in terrible shape, of course, but it did not break its all-time high as far as a 1 day candlestick is closed is concerned. Okay. Yes, it obviously broke its all-time high, but just letting you know that generally speaking, the 1 day candlestick close is probably a much more effective resistance level than the actual candle wick or the actual high itself in this regard, which is about $8.92. So we have a resistance channel from 767 upwards of 892. All right, so looking at the moving averages, they're kind of not really doing all that much, right? Still, again, very new data, not enough data really to note, but the price is well above both moving averages, which is a good sign. That works as a support level, essentially. Therefore, $5.25 would probably be the bottom for Gods if it were to continue to retrace. Now, how much lower is it going to go? It's hard to say specifically. Ultimately, coins like this that are a little bit newer, they do have a tendency of fluctuating a lot initially, which we've seen so far. But traditionally speaking, based on Fibonacci retracement levels, I see the most amount of consolidation closer to 0.5. So 0.5 should be our bottom here, basically just meaning that from its lowest point to its highest point, it's retraced about half its way, right? So obviously we have the super low point here and this fairly high point here. I would say 0.5 is the lowest, which would put us at about $5.92. We can maybe just say a round number of $6 would probably be the floor for Gods in the immediate future. Right. Again, just based on averages. That's kind of how this all works, right? So the average, retracement is about 0.5, downwards about 0.382. So if we do lose support at 0.5, which is $5.92, we could see 521 as the next target. Okay. I think it's low likelihood to go down that low, and here's the reason why. Look at the 4-hour chart. We got 1, 2, 3, 4, 5 candlesticks that tested, and the eventuality of the 5th candlestick broke above, right? So if you look here, this is a strong resistance. Therefore, it's considered a strong support level now, right? Once you break a strong resistance plane, typically an all-time high, or in this case, on the 4-hour chart, it was tested roughly 5 times in a 24-hour period, then you can kind of assess that as being a strong resistance. Another thing we can see here too is that was a cup and handle breakout, right? You got the cup, handle, and it broke out above. So ultimately, that is, that's a strong, strong support level. We've seen this plenty of times before. I think Solana had a cup and handle pattern last month. We took a trade on, and of course, the price went up, came back down, tested that as a support, and then continued upwards. So we shouldn't expect $6 or 5.92 to be, broken at this rate, just based on those metrics alone. Okay, so that's kind of just something to note. Furthermore, we're going to take a look at the 1 hour chart and see where we're at in this short-term progression, this down push, because obviously this downward trend, we need to know if it's going to quit or how much lower we're going to go. Again, based on what we looked at so far, 5.92/$6 should be the bottom. But here's the thing that we need to understand is the fact that this Ichimoku cloud is telling us we still are in good shape if we have a short position. So if we basically bought high and we're going to sell lower to take a profit that way, the inverse of what most people do. Again, you're just kind of a traditional trader. Don't worry about it. It requires margin. But that being said, if you're shorting, you would still have an open position. You'd still want to keep it open. And the main reason why is because the lagging span hasn't intersected with the price action yet. So we can still expect the price to continue downwards. And of course, the conversion line is below the baseline, which essentially just means if you have a short position, you're still in good shape. So we have all good signs here for a short position, basically meaning that the price will likely continue to progress downwards instead of up in the immediate near future. Okay. So long story short, don't open a long position right now until that changes, and we shouldn't expect that change until another 24 to 48 hours, because first of all, the cloud has to be below the price. So just say the price averages out here at about 5.92, then we want it to be able to eventually break above the cloud, and the cloud will naturally progress downwards based on the fact that it's going to be a mirror image of this, right? So you see this, it's gonna basically mirror that. I know my drawings are not very spectacular here, but what I'm getting at is that we have an obvious downtrend, and we need to let it come to fruition, let it finish its downtrend before we take a position, right? Because what you're doing right now is if you try to get in, you're chasing the bottom. We never chase the bottom. We only join in when the bulls are in control, right? At least if you're going to be buying low and selling high, that's the traditional ways in which most people trade, then you're going to want to wait this out because it hasn't come to full effect yet. It hasn't essentially found its bottom, right? Furthermore, let's see if we can look at TD sequential. It tells us here we got a 7 and we got a reset. So it's just this short consolidation periods that keep occurring here. So you can see we came from a 3 all the way down to a 9, ultimately telling us that, hey, we should have had to push the upside. It got rejected out. Now we're coming back down again. So this downtrend is not by any means close to being over yet. I would say we're going to have at least 24 to 48 hours left of bearish sentiment. And it's ultimately going to come down to one of two things. I think it's likely that 0.5 on Fibonacci retracement against $6 or 5.92 should hold as a strong support based on its previous cup and handle pattern and the fact that it was rejected out multiple times right here. Okay, because the stronger a resistance becomes and then eventually is broken, that reaffirms itself as an even stronger support, right? So the fact that it had this much trouble breaking and then eventually broke is a good sign, and you can see obviously that it's looking at a strong support level moving forward. So I don't think we're going to lose $6 or 5.92 as a support, but if we were to, just say, because that can happen, there's no guarantees, the price could come down as low as 5.23. That would be the secondary worst case scenario. Or actually, it's not even a worst case scenario, but I would just say that would be a reality, if you will, if we lose the support. But that's a very strong support, and we don't know until we get there. Okay. All right. So hopefully that makes sense, and I'm not speaking in circles. I would just say hold off and take in a position, let it find its bottom first, and of course, let it bounce and consolidate, and then continue progressing upwards. See, if we use the Ichimoku cloud in the right way, we're going to be able to join in when the bulls are in control, and we're going to be able to exit our position before the bulls lose control. That's the ultimate reason why I love the cloud, and it works very well for my conservative trading style, because you have to be careful in crypto. I know you got a lot of folks out there that say you don't win unless you risk it. There's truth in that too, but my risk tolerance is tight coming from a traditional stock trading scenario, if you will. I've been trading for over 15 years, and with crypto, you've got to respect the fact that it's extremely volatile. So protect your nest, make sure you set good stop losses and profit targets. Those are all things that I cover in my trading community, so be sure to check that out, of course, in your own time. But the main purpose as to why I'm specifying this is just that I work with a lot of people that have gotten wrecked in their days, and that's because they're taking risky trades and not closing them out when they should. So don't be afraid to get a stop loss. I mean, really good traders have tremendous amount of losses, but what they do is they maximize their gains, and that's why the cloud and all these things that we've looked at here so far are helping us with that. So that being said, be cautious, be careful. We'll cover gods again here soon. I thank you so much for joining me and look forward to getting to know you better if you consider joining. But I hope you have a great rest of your day. Thanks again for your time. We'll see you soon. Bye-bye.